It's Gail coming to you from GailSellsHouses.com, and today I want to talk to you about the new mortgage changes which were just announced yesterday, June 21st, 2012. We want to discuss what are these changes, who does it affect, what does it mean to the average home buyer, when does this take effect, and how will this affect the real estate market. There are 4 new changes that were announced. The first one has to do with the amortization period. This has been reduced from 30 years down to 25 years. Reducing the amortization means 2 things. It potentially decreases the maximum mortgage amount you qualify for, as well as increases the monthly mortgage payments. The next change has to do with the refinancing. They have lowered the maximum amount that Canadians can borrow when refinancing from 85% down to 80% of the value of their homes. Next, we have the qualifications provisions as it relates to your gross debt service ratio and your total debt service ratio. You must now qualify under 32% GDS and 40% TDS, which is your total debt service ratio. What does this mean? These ratios determine affordability and what they're used when we're qualifying you for a mortgage. The gross debt service ratio looks at your monthly housing cost in comparison to your gross monthly income. Your total debt service ratio, meaning when you add your payments for your car and for any other monthly payments you have, credit card loans out there, that now cannot be more than 44%. The next change has to do with insured mortgages, which is now capped at $1 million. So this should not really affect most first-time home buyers. It's really those people who are move-up buyers. And what it means is that you now have to have 20% down payment, which most people would. These changes only affect those home buyers who have less than 20% down payment. What does it mean to the average home buyer? Number 1, increased monthly payments. So, for example, if you had a $240,000 mortgage right now at the current 5-year fixed term rate, and if you had the pre-approval for 30 years, bringing it down to 25 years is just a difference of approximately about $131 per month in payments. The good news is that it reduces the amount of interest that is paid out over the life of the mortgage. It can potentially decrease your mortgage qualification amount. And if you're moving up to $1 million property, it just means you need 20% down payment and by after July 9th. July 9th is the date when everything comes into effect. But what you need to understand is that if you have a firm offer right now, even though you're closing after July 9th, this does not affect you. After July 9th, these new changes come into effect. So if you have a current pre-approval, you haven't found a home, if you can find a home and it firms up before July 9th, you can still qualify under the old rules. How will this affect the real estate market? I think it will be similar to an interest rate increase, but it will not cause the panic that an interest rate increase would cause right now. I think it should stabilize the real estate market, and there'll be more choices for prudent home buyers out there, meaning that I think there'll be less multiple offer scenarios. So those home buyers, you should not get as frustrated getting into the market, because I think you should be able to find the home that you require, because buyers are now and sellers are going to be a little bit more cautious. If you'd require more information, please do give me a call at 416-540-8681 to get more details. And I'd love to sit down with you and just see how these rules affect you, if they affect you, and how you can get into the home of your dreams.